Today we are going to discuss the accounting standards, the Islamic financial reporting system. We will start from number one, that is statement of financial accounting. Number one, the topic is conceptual framework for financial reporting by Islamic financial institutions. Today we are going to discuss the accounting concepts. Islamic accounting is quite similar to the conventional accounting with a lot of differences when we go in deeper calculations, but in terms of structuring, when you see the US gaps like United States generally accepted accounting principles, you will see that we learn how to see the financial statements, what is asset, liability, equities, expensive, income, what is events after balance sheet date, subsequent events, and lot of other issues, segment reporting. This is in conventional accounting according to US GAAP we study, and I am going to compare all these standards in terms of Islamic standards today, and I will highlight the differences, calculation differences, conceptual differences side by side. We'll start our discussion with an introduction that how accounting standards are formed. What is the importance of conceptual frameworks in the IFIs? What approaches we have while we are going to develop the standards, accounting standard in the light of Sharia and Islamic rules and principles. We'll see who are the users of the financial statements. Then of course we are going to see what is the information available in the set of financial statements from an IFI perspective. We will see the authoritative status of the frameworks. In the subsequent portion of our discussion, we will see what are the objectives of financial accounting and financial reporting. We will see that when we say financial accounting and reporting, what could be the possible aims behind doing that and what possible advantages we get from it. We'll discuss the limitations in terms of accounting, because accounting done on accrual basis, and when you compare the market sensitivities, fluctuation of the prices, we have to be very careful about the sensitivity of the facts and figures mentioned in our cost-based financial accounting reports and records. So we'll see what are the limitations of financial accounting, and we will definitely, whenever we do something, we see the cost-benefit analysis. So in terms of presentation, of course, we'll take care of this. We'll discuss the financial reports and the processes. We'll see what are the categories of financial report, what is the general purpose financial statement, what is the primary statement, what is a statement of accounting policies, what are the footnotes, explanatory notes which define the way the calculation has been done. If you see the financial statements are a one-page summary like statement of financial position, statement of cash flow, statement of income statement, comprehensive income, and OCI, other comprehensive income. These are one page. From this page we cannot conclude that how and what are the basis of preparation of these financial statements. This course will help us to understand that when we see a financial statements, what are the concept, logic, rules, principles, and calculation methods used on the back end. That will be in the footnotes. These are called additional disclosures, explanatory notes. We'll see what supplementary statement we need to attach. In our accounting terms, when we see financial statements, it's a composition of certain categories, starting with assets, liabilities, equity, owner's equity, equity of investment account holders, Then there are certain things like off-balance sheet items. We'll see in income statement, income, expenses and losses. Return on investment accounts. We'll see the net income, net losses. Never you will see in Islamic finance in the word of interest, because interest is prohibited. And according to the hadiths, like if someone who is going to write interest, he will be the part of this, and severe punishment will be given to him in the hell. So when it comes to Islamic finances, Islamic finance, accounting, auditing, interest is prohibited strictly. Financial accounting process, how we recognize revenue, asset, liabilities, what is the measurement concepts and accounting exemptions. We'll discuss what is financial accounting process, like is it debit, credit, and how assets increase, decrease, the effect of liabilities, capital, equity. Of course, we are going to discuss the recognition in terms of profit and loss in relation to off-balance items. We will see the concept of accounting measurements, we'll see measurement attributes. We'll see what is the concept of historical cost, fair value, net realizable value, salvage value. We'll see the market values. We'll see what accounting exemptions we made while we prepare the financial statements. We'll see the accounting unit concept. We'll see the going concerns, that the entity will not close its operation before 12 months at least. What is the concept of cash-based accounting, and what is the concept of accrual-based accounting? This is what we'll discuss in today's discussion. We will see when there is instability in the price units, and how the market prices reflects the accounting prices, accounting cost. We'll see what kind of financial reporting and processes. We'll discuss about high quality, true and fair view. Now we'll see that it should be useful for making effective decisions. We'll take care of transparency. We'll talk about understandability. We'll see it should be relevant, reliable, and the presentation is in a faithful way. We'll see it should have neutrality part. We'll discuss about substance over form concept. This is a very important concept in accountancy. We'll discuss about completeness, verifiabilities. We'll discuss about consistency, that it should be consistent, accounting practice should be consistent over the period of time. As per standards, financial statement at least 2 years should be comparable. So we will see the last year, this year. We'll talk about prudence. Prudence is a very important concept in terms of accounting, because we need to use prudence a couple of times for a lot of important matters. We'll discuss about materiality. Of course, materiality is one of the major factors which should be considered, because all immaterial things cannot be considered every time in order to optimize the resources. We'll discuss about cost of information. In the last, I will explain you that when this standard was developed and adopted. Today we are going to discuss the financial reporting structuring frameworks, and it is specifically for the IFIs, International Islamic Financial Institutions. They should be rational. It should provide a base for financial accounting and reporting for Islamic organizations. And the important reason underpin the development of conceptual framework and special financial accounting standards. We need to establish a common framework, so all over the world we can compare our figures, calculations, and it just give a complete presentation in terms of Islamic investment and Islamic financial institutions. And of course, it should be in accordance with Sharia law, rules and regulations.